I'm David, a certified international investment analyst with 20 years of trading experience. Everything I share today is based on my real trading experience. If this is your first time coming across my video and you find it helpful, please hit the subscribe button below. Don't miss this treasure trove of content. In the future, I'll share trading techniques for US stocks, gold, forex, and cryptocurrencies. Your likes and encouragement will give me more motivation to share valuable insights. If you don't know how to identify trends, what time frames to use, how to enter or exit trades, and your trading is still in the red, then you've come to the right place. Today, I'll teach you my 4-step simplified trading method to help you establish a trading framework and start profiting from trading. Please note that the content of this short video reflects my personal opinions and is not investment advice. It's just me sharing my hands-on experience with you. Today I will share a method with you. With this method, I created a profit of more than 50 times a week. What is this method? If you are interested, please click subscribe button first, and then if there is a harvest, remember to give me a like. Okay, so now I'm going to introduce to you that my method is actually a relatively simple method. Everybody listen carefully. This method is a homeopathic trading method. What is homeopathic trading method? First of all, you have to trade in the trending market to avoid when there is no trend, when the market is volatile. When there will be a trend, it is often after a breakthrough, and then start to take a unilateral market. For example, a unilateral decline can last for more than 3 days. If you catch a band in these 3 days, you can make a lot of money, so this breakthrough on the first day is crucial. If you follow up after the breakthrough on the first day, you can still earn a price difference for 2 days. How to look at the breakthrough on the first day? First of all, it should have been a volatile trend before, and then on the first day it hits a new low in the near future, showing a big negative candlestick. At this time, even if you don't enter the market in time that day, it doesn't matter. You can find a position to short the next day and short the next day. This timing is critical. You have to wait until he is at the level of a small cycle, such as an hour or 15 minutes. Follow up when there is a clear short signal, then you have to hold it after you enter the market successfully. His key is that you have to be able to hold the list, because this operation is done at the daily line level. That is to say, after you enter the market the next day, you can take out the list on the same day, and then you can take out the list on the third day. If its trend continues to go down, you have to hold it all the time. Then you can do it. This is the homeopathic trading method. To sum up, first of all, you have to find the starting point of the trend, and then you have to follow up in time to find the opening point. The opening position is not to chase, but to avoid its withdrawal, because if you use leverage, this retracement will also cause you to lose a lot. Okay, so why can I make more than 50 times the profit? The second skill is that I use the lever appropriately. The lever is a double-edged sword. If you use leverage properly in a homeopathic market, it will magnify your earnings. But if the leverage is too high, it can easily cause you to lose money. It can easily cause you to lose the list or withdraw sharply, so the leverage should not be too high. First of all, he wants to make sure that you can take out your profit list and magnify your earnings on this basis. Then the third aspect is that you should trade the daily line level. That is, it takes time to make profits. This time is calculated on a daily basis. Third step is to hold the position. And then at the end, you need to know when to exit. In a wave of market, if it is over, you can't exit in time. Its retracement will also be relatively large, and it will be difficult to obtain the best profit effect. When to withdraw, you should also observe it at the daily line level. When the daily line goes out of the reverse trend, at this time you have to consider closing the position. The specific signal. Here's an example of my trading of cryptocurrency this year. In February this year, I shorted Solana. When a sell signal appeared for Solana at that time, I entered the market immediately and caught a 3-day decline. Moreover, I used 50 times leverage, so the profit in 3 days reached 50 times. But after I exited, it dropped a lot more. So in a trending market, the longer you hold, the more you earn. To sum it up, you need to capture a daily level price swing, enter the market immediately, hold the position, be able to exit in a timely manner until the trend is over, and use a certain amount of leverage to amplify your earnings. Okay, have you learned what I shared with you today? If you want to continue to learn more trading skills, I will open a live broadcast later. You might as well click on my attention. Don't miss out on more exciting content later.